You receive a phone call. The voice on the other end is polite, almost friendly. They say they have good news for you. Pre-approved credit. Money available in your account within hours. No bureaucracy, no complications. And you don't even need to leave home. Sounds perfect, doesn't it? Sounds too good to be true. And you know what's worse? It really is too good to be true. But by the time you realize this, it's too late. The money is already deposited. The payments have already started coming out. And you're trapped in a situation that will drain your retirement for years. And the scariest part is that this is happening right now to thousands of retirees who thought they were getting a good deal. The story always starts the same way. You're at home just another day. The phone rings. On the other end, someone who seems to know everything about you, your full name, your social security number, even the amount of your retirement check. They say they work for a bank, a finance company, a reputable institution, and they have an exclusive offer just for you. A payroll loan with incredibly low rates, already approved, just waiting for your confirmation. You didn't even ask for it, but they insist it's a unique opportunity, that other retirees have already taken advantage of it, that the money can solve that problem you have. And deep down, you do have a problem. There's always something. Maybe an overdue bill, a home repair, expensive medication, a gift for grandkids, something that your retirement check didn't quite cover this month. And that's when the process begins. They make it sound so simple. They say they'll send you a link by text, or they'll send someone to your home to sign the papers, or you just need to confirm some information over the phone. And you think, why not? If the money is already approved, if the payments will fit in the budget, if it solves an immediate problem, why not accept? So you accept, and in that moment, without realizing it, you just walked into a trap that was carefully designed to seem harmless. The money hits your account, fast, sometimes the same day, and you feel momentary relief. You solve that urgent problem, pay that bill, buy what you needed, and for a few weeks, everything seems fine. But then the first deduction from your retirement check arrives, and you look at the amount and realize it's bigger than you expected. Much bigger. They had talked about small payments, but what's coming out of your account isn't small. And you try to remember exactly what was agreed upon. How many payments were there? What was the interest rate? How much did you actually borrow? And then you realize you don't have clear answers to these questions because nobody explained it properly, because you didn't read the contract carefully, because everything happened too fast. You try to call back that number that called you. Sometimes it doesn't answer. Sometimes it's a different agent who doesn't know anything. Sometimes they transfer you from department to department until you give up and you start to understand that all that friendliness was just to close the deal. Now that the loan is active, you're just another number in the system, just another contract generating profit. And the payments will keep coming out month after month without mercy, without flexibility, without any easy way to negotiate. What many people don't understand about payroll loans is that they were designed precisely to be irresistible. The rates are lower than other types of credit. That's true, but lower doesn't mean low. And more importantly, the deduction is automatic. It comes straight out of your retirement check before the money even reaches your hand. You can't not pay. You can't skip a month. You can't negotiate when things get tight. The bank has total guarantee. And that's why they offer it so easily. Because for them, there's no risk. All the risk is on you. And there's something else almost nobody notices at the time of signing. These loans last for years. Not 6 months, not 12 months, 36, 48, 60, sometimes even 84 payments. That means you'll be paying that loan for the next 5, 6, 7 years. And during all that time, that payment will be there every month, coming out of your retirement, reducing what you have available to live on, limiting your flexibility for anything else that comes up, and things always come up. Now we get to the part that's truly scary. Many retirees enter a vicious cycle without realizing it. They take out a loan to solve a problem. The payments start weighing on the budget. A few months later, another problem arises, another unexpected expense. And what do? They take out another loan because now they know it's easy, because the phone keeps ringing with new offers, because they always say you have available credit. and you really do, banks calculate that you can commit up to a percentage of your retirement to loans. And as long as you haven't reached that limit, they'll keep offering more. So you take the second loan, then the third, and suddenly, half of your retirement is committed to payments. Half. You work your entire life to secure that monthly amount, and now half of it disappears before you can even use it. Little is left for basic expenses. Little is left for emergencies. Little is left for anything beyond survival in the tightest mode possible. And you wonder how you got here. How something that seems so harmless, so simple, turned into a financial prison. And it gets worse. Some people discover that loans were taken out in their name without real authorization. Scammers who obtain personal data and create fake contracts, or finance company representatives who pressure signatures on contracts the person didn't fully understand. Elderly people who sign papers without reading because they trust the person explaining. And then they discover that what was said verbally has nothing to do with what's written in the contract. And what matters is what's written. Always. The psychological pressure is another factor few consider. When someone calls offering easy money, they use specific techniques to make you decide quickly. They say the offer is time limited, that if you don't accept now, you'll lose the opportunity, that others have already taken advantage and you're being left behind. They create an artificial sense of urgency because they know that if you have time to think, to consult someone, to research better, you'll probably refuse. So they need you to decide right there in that moment without time for reflection. And many retirees are vulnerable to this type of pressure, not because they're naive, but because they're in a delicate financial situation, because money is tight, because they really need to solve something urgent. And when someone offers an immediate solution, it's hard to resist. It's human to want to solve the problem right in front of you, even if it creates bigger problems in the future. But the future seems distant, and the problem is now. There's also the factor of misplaced trust. Many of these loans are offered by people who present themselves as if they want to help. They speak with a calm, friendly voice. They call you by name, treat you with familiarity. They make it seem like they're on your side, that they want to help you solve your financial problems. But they're not. They're selling a product that generates profit for their institution and long-term commitment for you. And after the contract is signed, all that friendliness disappears because they already got what they wanted. Another cruel aspect of this trap is how it affects quality of life. Imagine working your entire life waiting for retirement, waiting for the moment when you could finally rest, enjoy life a bit, have some financial peace, and then discovering that a good part of that money is committed to debts you don't even quite remember how they started. That the years that should be for rest became years of tight survival. That you continue having to make difficult choices, continue having to cut expenses, continue living tight even after decades of work and contribution. This creates not just financial difficulty, but also emotional suffering, the feeling of having been deceived, of having fallen for something you should have noticed, of being trapped in a situation that seems to have no way out. And worst of all, people often feel ashamed to talk about it, ashamed to admit they took out too many loans, ashamed to ask for help. So they suffer alone while the payments keep coming out month after month, year after year. And the trap has yet another layer. Many of these loans come with mandatory insurance. Insurance that theoretically protects you in case of death or disability, but in practice only makes the payments even more expensive. And insurance is rarely explained clearly. You discover you're paying for it only when you look at the contract carefully. And the insurance amount added to the interest, added to the administrative fees, means you end up paying much more than the amount you actually borrowed. Sometimes double, sometimes more. So you borrowed $5,000, solved an immediate problem. But over the next 5 years, you'll end up paying back $10,000, $12,000. And meanwhile, your retirement is reduced. Your margin to deal with emergencies is compromised. Your quality of life is diminished. All because of a quick decision that seemed to make sense at the time, but turned out to be a long-term burden. And emergencies always come. Always. A health problem requiring treatment. An essential appliance that breaks. Emergency help for a child or grandchild. And when this happens, you no longer have margin. because your margin is already committed to loan payments. So you're trapped between impossible choices. Either don't solve the new problem, or take out another loan to solve it. And if you take another one, the cycle deepens. Some people reach the point of having to choose between buying food and buying medicine, between paying the electric bill or buying gas, not because a retirement is insufficient in itself, but because a good part of it is trapped in loan payments that seem like a good idea at the time. And this is perhaps the most unfair part of this entire situation. You contributed your entire life to have a retirement. That money is yours by right. But in practice, a significant part of it goes to banks and finance companies, month after month, without you being able to do much about it. And the law allows this. Payroll loans are legal, regulated, have rules, but the rules are made more to protect those who lend than those who borrow. The bank has absolute guarantee. If you don't pay, the deduction comes out automatically. If you die, the insurance covers it or the balance is deducted from what's left for the heirs. One way or another, the bank gets paid, and you or your family are left with the loss. Another point worth noting is the difficulty of getting out of this trap once you're in. Theoretically, you can pay off the loan early, but for that you need to have the total amount available. And if you had that money, you probably wouldn't have taken a loan in the first place. So you're stuck. The payments continue. The interest continues. And the only way to get free is to wait. Wait years until the last payment is made. And during all that time, your financial life is compromised. There's also the issue of automatic renewal. Some finance companies offer loan renewal before it's finished. You're still paying the last payments of one loan and already receive the offer of a new one. And many people accept because the money is needed, because a necessity arose, because they're already used to that monthly deduction. And it seems like it doesn't matter to keep paying, but it does, because each renewal is a new cycle. More years committed, more interest paid, more profit for the bank, and less money for you. And meanwhile, life goes on. Years pass, health may worsen, requiring more expenses. Prices go up, further reducing the purchasing power of what's left of retirement. And that loan payment stays there, fixed, coming out every month, relentless. You age trapped in a debt you may not even remember exactly why you took. The problem you solved back then has been forgotten, but the consequences continue. It's important to understand that this doesn't happen because people are irresponsible. It happens because there's an entire industry built to make it seem like a good idea. Massive advertising, constant calls, offers that seem personalized, extreme ease of contracting, and very little transparency about the real long-term consequences. The system is designed for you to accept quickly and regret slowly. And regret comes. It always comes. It may take a few months. It may take a year. But the moment arrives when you look at your retirement statement. See how much is coming out in payments. Calculate how much is still left to pay. And realize the size of the mistake. You realize that the money that solved a small problem created a much bigger one. That the immediate solution transformed into a long-term prison. And that now there's not much to do except endure until the end. But there is something that can be done, not for those already in this situation. Unfortunately, the options are limited. But for those who haven't yet fallen into this trap, and that something is very simple, be suspicious. Be suspicious of offers that seem too good. Be suspicious of unsolicited calls offering credit. Be suspicious of pressure to decide quickly. Be suspicious of anything that promises to solve your financial problems without effort or consequence. Because the hard truth is there's no such thing as easy money. There's no such thing as a loan without real cost. There's no magic solution to financial difficulties. And when someone offers you something that seems magical, they're probably selling you an illusion, an expensive illusion that you'll pay for years. The easy loan trap works because it exploits real needs, retirees who really need money, who really have problems to solve, who really are vulnerable, and it offers a solution that seems perfect on paper. But in practice, it's a burden that will last much longer than the momentary relief it provides. It's trading an immediate and perhaps solvable problem for a long-term problem that's much harder to solve. And the saddest part is that this is happening on a massive scale. Millions of committed retirees, Millions of people who worked decades to have a retirement and now see a good part of it disappear in loan payments. Millions of similar stories of people who thought they were getting a good deal and discovered too late they weren't, that the ease was a trap, that the easy loan had a very high price. So if you're thinking about taking a payroll loan, stop, breathe, think carefully, very carefully. Calculate not just whether the payment fits the budget now, but whether it will fit for the next 5, 6, 7 years. Think about how your life will be with that payment coming out every month. Think about what other things you'll have to stop doing, buying, or living because of that automatic deduction. And ask yourself if the problem you want to solve now is really worth years of financial strain. Most of the time, the honest answer is no. And recognizing this before signing can save you from a long and painful regret that thousands of people are living right now.